Very good evening to all. Joined in the third day of validity session of the series of WEBINT on Ind-AS. Hope with the blessings of Lord Jagannath, you all are fine and well. Today's resource person, respected CMA, CA, CS, Dr. Gopal Krishna Raju sir, respected Central Council member, Regional Council member, past chairman of the chapter and EIRC, esteemed members and stakeholders present in the today's virtual platform. Chairman of the chapter, CMA Himaj Mishra, Secretary of the chapter, CMA Suryanarayan Tripathi, and all my professional colleagues in the managing committee. I, on behalf of managing committee, warmly welcome you all to the third day of 3-day series of WEBINT on Ind-AS. Thanks to all the participants for active participation and continued support, which inspired us to conduct more and more programs. Hope same sort of cooperation and support in future events. Today, we have with us most learned personality, CMA, CA, CS Dr. Gopal Krishna Raju sir, who will deliver on two Ind-AS, that is Ind-AS 24, related party disclosure, and Ind-AS 37, provision and contingent liabilities. Hope this will be another learning session for all of us. Before introduction of today's research person, I would like to request our official to play the Institute anthem as token of honor to our noble institute. Thank you. Now, it is time to welcome CMA, CACS Dr. Gopal Raju sir. CMA Gopal Krishna Raju sir is a basically practicing chartered accountant from Chennai, associate member of the Institute of Cost Accountants of India and Institute of Company Secretaries of India, and done his personal postgraduate diploma holder in operational research and financial management from Pondicherry Central University, MPhil in management from Tamil Nadu Open University, qualified information system auditor, and qualified part 1 of post qualification course in international trade laws and World Trade Organization from ICI. Holds 8 NSC certificates in financial market from the NCFM, from NSEIL, National Stock Exchange of India Limited, also an IBC professional. He elected for the consecutive third term to the Southern India Regional Council of the Institute of Chartered Accountants of India for the term 2016-2019. He authored 2 books, namely Standard Costing and Variance Analysis of Professional Students and First Lesson in Information Technology for CA Students, with 2 editions by Snow White Publisher, Mumbai. He is a seasoned speaker on information technology, finance and taxation, and a visiting guest faculty for numerous institutions, corporates, and business schools. He is a member of Bombay Chartered Accountants Society and Madras Management Association, and live member of the Society of Auditors. a Chartered Accountant Study Circles, and an active Rotarian and nominated member of Audit Advisory Board, Director General of Audit Central, Chennai, Executive Committee, Center for Entrepreneurial Development, Anna University, Chennai, and Co-Chairman Expert Committee on Corporate, Allied Lodge, CSR Governance, and Ethics of Hindustan Chamber of Commerce. Thank you, sir, for accepting our invitation.
Thank you.
Despite your busy schedule.
Thank you.
Thank you. Now, without taking much time, I would like to request CMA Himoj Mishra, Chairman of the chapter, to address.
Thank you, Shakti sir. Namaskar to all. I convey my heartfelt thanks and deep gratitude to all of you for your continued support extended since last 3 days. Respected CMA, CA, CS, Dr. Gopal Krishna Raju sir, esteemed member, stakeholder, joined in Plan India in today's virtual platform, CMA Shaktidhar Singh sir, Chairman PD Committee, past Chairman of the Bhubaneswar chapter, CMA Surjanarayan Tripathi sir, Secretary of the chapter, and professional colleagues in the Management Committee. With a great pleasure to welcome you all again to the today's WEBINT on Ind-AS 2437. Let's listen from our resource person, CMA Dr. Gopal Krishna Raju sir. Hope it will be another good learning and interactive session. Requesting Shakti sir to continue. Thank you. Namaskar.
Thank you.
Thank you, CMA Himoj Mishra, Chairman of the chapter. Now I would like to request CMA CACS Dr. Gopal Krishna Raju sir. Sir, kindly start the session.
Yeah, thank you.
Thank you.
Very good evening, friends. At the outset, let me thank the Institute of Cost Accountants of India, especially Bhubaneswar chapter, Chairman CMA Himoj Mishra, Chairman of the PD Committee CMA Shaktidhar Singh, and all the members of Bhubaneswar chapter and others who are connected from various parts of the country. Let me at the first instance convey my best wishes and also thanks to Bhubaneswar chapter for this wonderful opportunity to share my thoughts on 24 and 37. It's a very interesting standard. I'll be interactive and we have 60 plus participants online. I appreciate and I know every moment is very precious. So your time is very, very precious for yourself as well as for the institute. So therefore, I will divide this session into 2 parts. The first, I'll do a 40-minute presentation and we'll have a Q&A also. And I will maybe insist or with the request that those who wish to share your queries, you can put you in the chat box also along with your name, and I will read your name and I'll request you to kindly unmute your video and audio at that time and share your reflections along with that query. We'll be very happy to take those questions. Coming to today's standard 24, it's a very, very good standard. I actually have a fancy for this standard 24. This number 24 is very interesting number, and we can't forget this number. Why? Every day is 24 hours, and we are connected in this 24 hours with related parties only. maybe morning and evening, night, we are with our family members. And in business or in profession, we are with our partners, directors, board members. So related party are there throughout our life. And this standard, you know what is the first message I'm going to share with all of you with respect to this standard? With respect to this standard, this is not a accounting related standard. This is a disclosure standard. I repeat, this is a purely disclosure standard. So it is of highest order. When I do a transaction in with a related party, so better to quantify that. For example, there is a transaction between holding company and subsidiary company, and the entire subsidiary company sale is only to holding company, and I make profit. So technically, profit is not made from outside. Profit is made from inside. So that is a message we give. So this is a disclosure standard. It is not an accounting prescription, but prescription will come in the form when you make a presentation of your financial statements. Otherwise, financial reporting. So when you do the financial reporting, you need to do some disclosures. Now, I wish to share with you some interesting points. If at all you have been having a idea that related party transactions are should not be done, it's a taboo. It is prohibited. No. Related party transaction, no, let us avoid. It is not possible. My dear friends, is it possible for us to live in a society without relatives, without family members? Difficult. Man is a human being, is a person who lives in a society. We have been cultured to live in a society. And if business also will happen in society only. Now, my son is going to start a business. Okay, presume that. Then from where he will ask, to whom he will ask money? He will go to bank. Bank will ask for collateral. We will go to an investor. Investor will say, what is the experience you have? So, if they need capital, they'll only come to the relatives, family members, father, mother, first relative, brother, sister. Then maybe if at all he is blessed, his in-laws can fund his business transactions. So please understand, related party transactions are not avoidable transactions. I repeat once again, related party transactions are not an avoidable transaction, provided you disclose it. Okay, provided you disclose it. Otherwise, it will become an avoidable transactions. It's called an avoidance transactions. So this is the first message. 24, please understand, there is, I will say 24 is a dharma standard. Dharma, highest order, dharma. And in Ashoka Chakra, you have 24 spokes. And that 24 spokes represent Dharma Chakra. Ashoka Chakra, it's actually a depiction of Dharma Chakra. And 24 is also one more significance is there. It represents 100% purity in gold. Not 22 karat, 24 karat, it's soft gold. Okay. So it is 100% pure gold. And remember, 24 itself is a number that symbolizes home, health, love, beauty, relationships, teamwork, romance, and harmony, family, companionship. So 24 has this significance. 24 hours, 24 carat, 24 spokes. 24 numbers symbolizes only love and family. So it's quite surprising. It's quite surprising. Good. This is one standard which has only 27 paras. My God. 27. That's all. Okay, Katham. Okay, 27 paras. But there is a definition paragraph. I wish everybody read this definition. The para number 9, which has 8 items. Okay. So, para number 9, definitions, which has, let me take you to 9. 9. Okay. So, it has 8 items. So, this is definition 1, related party. Okay. Then, you know what is definition 2? Definition 2 is related party transaction. 2 is actually related party transaction. Number 2. Number 3 is close members, sorry. Close members of the family is number 3. And number 4 is compensation. Okay. And number 5 is key managerial person. And this is number 6. And this is number 7. And this is number 8. Yeah. So actually there are 8 standards. I mean 8 definitions. But if you look at the 8th definition, there are terms like control, okay, investment entity, joint control, significant influence. Okay. So these are all defined in other standards. So there are only 7, but there are an 8th standard because this term will give you the connect to the related party. When the control is there, then they are a related party. The entity that is controlled, also related party. Entity that is controlling is also related party. Then what is control? So very interesting definition. You need to know this before. I will say this entire standard is Katham. If you know this definition. That too, first definition. Who is a related party? Matter over. I'll say 90% of standard is over if you know who is a related party. Now I want to share with you something very interesting. Look at this. Okay. Look at this. These are all the definition of related party in the respective act. You have exactly again 224. This is 24. And in insolvency bankruptcy code, 224 is a related party definition. 224 capital A is also related party. 224 is also related party. Hey, what is this? 224 is a related party in relation to a company. 224A is a related party in relation to an individual. In relation to an individual, related party. In relation to a company, a related party. But Companies Act is very clear. 276, they have defined related party that is in relation to a company. I'll just show you that. Very interesting. Look at this. 276. Related party in reference to company. But 277, this is with respect to an individual. That means person. So that blood relation. So this will be only blood relations. So here it is not blood relations. So positions, control. So that stuff. So quite interesting, guys. And this is your insolvency bankruptcy code. My God, it's look at the definition. 224 is related party in relation to the company, corporate data. And 224A is a related party in relation to an individual. So big. And maybe only this definition alone will take 1 hour. That much inputs is there. I just love this definition. So only after reading this definition, you will come to know, oh my God, do I have so many relatives? Then you will start counting. Oh, A, B, C, D. Oh my God, this many relatives are there. Okay, good. Now I will bring your kind attention to para 1. What is this para 1? The objective. Why this particular standard? You must understand the standard as being designed. Why the standard? Read this. The objective of this standard is to ensure. Okay, why the standard? To ensure, okay, to confirm that an entity's financial statements or balance sheet P&L account contain the disclosures necessary to draw the attention. Please look at this. Look at this. They have done transaction with related party. Okay. See, in childhood days, the monitor of the class will say, Miss, look, that person is actually doing this mischief, miss. So, he is the accounting standard. Okay. He is the prescription. So that so-and-so is doing that. So he is disclosing. Okay. He is disclosing the mischief to the miss. Okay. The objective of this standard is to ensure that an entity's financial statement contain the disclosure. Then I'll come, what he should disclose? Okay, what he should disclose? Necessary to draw attention. Whose attention? Whose attention? Shareholders, stakeholders. Okay. Attention to the possibility that its financial position and P&L may have been affected, okay, by the existence of related parties. Look at these wordings. Then who are related parties? You need to understand this. Who is a related party? And transactions, outstanding balances, commitments. Please look at these three. There is a related party, say brother of a director. Brother of a director, is he a related party? Yes. Brother of a director is a related party. I will come to this accounting standard definition. I will come. Now, you will ask me one question. So far in Companies Act, you have related party, 276 in relation to a company, 277 relative to a person, individual. In bankruptcy code also, insolvency bankruptcy code also, 224 is related party in relation to corporate debtor. 224A is related party in relation to an individual. Similarly, in accounting standard, do we have like that? Yes, you have. You have. Please come here. 9, para number 9. Related party who is a person or entity. Person or an entity. So, both have been merged. But they have given a breakup. Okay. A is with respect to individual. B is with respect to an entity. Okay. So, I just want to give an analogy. Okay. So, person, individual, there are 3 types are there. A1, A2, A3. And entity, you have 8 types. So 8 plus 3, 11. So that is why this definition is very big. Biggest, the largest definition. Okay. This definition will go more than 1 page. There is not even a single definition in accounting standard which will go beyond 1 page. Of course, there is one more definition is there, which is called financial assets, not financial liability. Financial asset definition will be a little, it is a 1 page definition, a slightly more than 1 page definition. Related party is more than 1 page definition. As I told you, if you finish the related party definition, okay, 8 plus 3, 11 points, be thorough. These are the only 11 relation. You will be actually surprised. Subject is over. But the interesting part is to understand this 11. To practically appreciate this 11. So I'll now take you into this subject one by one. We are now at 6:59, 7 o'clock. So I'll go for another 20 minutes maximum, maybe 15 minutes maximum. I'll explain this. Okay. Then I'll take you to the Ind-AS 37. And I want you to also know about certain disclosures. Maybe I'll take Reliance annual report. Okay. So there I want you to understand the related party disclosures. And I'll compare that with the disclosures paragraph given in Ind-AS, especially from para number 13 onwards. Para number 13. So out of 27 para, okay, the disclosure will start from 13 because there is nothing in this. See, in this standard, then nothing is there. Straight away, they'll explain what is a related party. Straight away, go for disclosure. That's matter over. Because the standard is a disclosure standard. This is not a prescription of any accounting, all this stuff and all, they don't do. Okay. So let me now take you to that particular paragraph of the disclosures of subsidiaries. You'll be quite surprised. Oh my God, this much is there. Baapre, baapre. Okay. Look at this. Look at this. Okay. This is what I want you to look into it. Okay. So I'll now take you to look at this 33. Related party disclosures. As per Ind-AS 24, the disclosure of transaction of the related party are given. Now I'll take you to the respective para number where they have mentioned it and how Reliance have given this. List of related party where control, that is why the definition control is very important. Okay, I'll come to that. So I will now take you to the definition, refer to each one paragraph, explain that, and then I'll go into it. Okay, good. Saroj Kanta Sahu is asking one question. Sir, Mr. Saroj is a KMP in X Limited and holds 20% share in Y Limited. Then related parties exist. We'll go one by one. Okay, I'm still in the definition itself. Okay, I know all of you have read the standard very well, but we'll read it once again. Okay, good. So now a related party is a person. So that means individual. Okay, or entity. Entity is the second part. That is related to the entity that is preparing its financial statement in the standard referred to as a reporting entity. So I am taking one annual report also. Now, I want you to understand something very important. Okay, when I'm going for 1A, in 1A, 1, 2, 3 is there. Now, before going to 1, 2, 3, I'll take you to this para number 2. Who, what, how, which, why. This standard shall be applied. Identify related party relationships. See, look at this. Relationships you need to. So what are all the related party relationships? And transactions is next. So that is why please look at this. Name of the related party. This is the first thing. And relationship. Look at this. Identify relationships. And for your information, your disclosures. Okay. In the disclosures, they made it very clear what and all you have to actually give in the disclosure. Okay. So let me now take you to that particular paragraph also one by one. Okay. So first is you have to identify the relationships. My God. Now I want to make one more observation. Okay, one more observation. Now here, look at this. Existence of related party. So that is why you need to first know the relationship. Someday relationship will be there, but transaction will not be there. What is the next one? And the transactions. Sometimes only relation will be there, but there is no transaction. During there, no transaction. Nil. There is no loan given or loan taken. Payment made, payment received. Expenditure made, expenditure taken. Turnover or purchase, nothing. So then that part may be 0. You will say no transaction, nil. But related party you must list out. That is why look at this. Name of the related party, relationship. Subsidiary. My God. Okay, it starts with 1. And please understand, many are limited. Okay. There are even other than limited also will be there. Okay, look at this. So you have that is a GMP, other companies. Okay. That is a BV, UK Limited. Okay. So all are subsidiary only. Only relationships. Sometimes it will even be a only relation. Look at this. So where they are a beneficiary, joint venture, associate, KMP, relative of KMP. So 376, my God. You have to mention all this. So 376, no, 391, sorry. So look at the question now. Okay. So you have to list out the related party. That is the first thing. Now, what is the first one? Identify related party and the transaction. So after the transaction will come. Now you have 391 relationships. Now, have you done transaction all 391? Okay, sometimes with respect to maybe you would have done transactions with subsidiary called Viacom 18 Media Private Limited. You have done a transaction Viacom 18 Media Private Limited. Okay. Now, please understand almost every day transaction is there. So that means 365 days transaction is there. Will you give day 1, day 2, day 3, day 4 transaction? No, that is why they were given how you have to give the transactions. You have to give, you need not give a line item by line item. You can actually give a summary. So that paragraph I will come. So how you have to give the transaction. Okay. So first is identify the related party, then give transactions. Okay. No, you are not only stopping with transaction. What is transactions? I have made a sale of 73 crore, 73.15 crore. Now, out of 73.15 crore, have you received everything? No, you have only received 70 crore. 3.15 crore is outstanding. So you have to mention outstanding balance also. That's a separate disclosure. Disclosure 1, you have to give the existence of related party. Disclosure 2, transactions. Disclosure 3, outstanding balance. So look at this. So identify outstanding balance, including commitments. Now, what is a commitment? Actually, they have not explained the term commitment anywhere here, but I'll give you an example. Commitment is when your company has given maybe an assurance, a letter they would have given. We are undertaking doing this project, and once this project is over, for example, they are constructing some building. Okay, so that is a 40-story building. In the 39th floor, right hand side, east facing, okay, that apartment will be allotted and registered in your name. So identify outstanding balance, including commitments given between an entity and its related party. Sometimes it can be commitments, sometimes it can be guarantees. Now please look at look at this. These are all transactions too. And these transactions, it is actually, look at this. 2,06,355. It is summary. Actually, these are all the line items of the transactions you have to give, which has been mentioned in para 21. Look at para 21. I'm going to related party. Okay, we don't have much time. Okay, look at para 21. Following are examples of transactions. Purchase or sale. No, this is purchase or sale. Then leasing, transfer R&D, transfer licensing. So they have only given I, J, K. So A, B, C, D, E, F, G, H, I, J, K. So only 11 items are given, but they are given 20 items. So yes, the balance sheet has actually 20 or more than 20. No, only 20. Okay. So 20. Wow. Transaction during there with related party. So that is why What are the transactions? There are examples. So it is not exhaustive. So maybe if you have a line item like this, take a summary. And how will you give the line items? That is given in 19. Look at this. The disclosure required by para 18. Okay. What is para 18? If an entity has related party transaction, only if. So that is why this word if is very important. Why important? Only related party relationships are, the transactions are not, then 18 you need not give. Will you say 0, 0, 0, 0, 0? No, you need not. That is a if. Only if transactions are there, you will give. If. It shall disclose the nature related party relationship and what? Minimum disclosure is what? Amount of transactions, amount of outstanding balance, and amount of commitments. Okay. The commitments includes the guarantee, given, received, all this stuff. Okay. Very interesting. Very, very interesting. Okay. Now look at this. Transactions. And you have, nature of transaction. Disclosures. In this with a major related party. So I'll come one by one. Now, you know the real maja. I'll say the real maja in this is the definition. Okay. Please go through this definition. Actually, I need more time to actually discuss this particular definition, but I'll do it one by one. So a related party is a person or entity who is related to the entity that is preparing its financial statement. A person or a close member of that person's family. Person, if he has control or joint control of the reporting entity, significant influence over the reporting entity, he is a member of the KMP. Now, my friend's question is, he had a question. Where is the question? I'm not able to see the question. Sorry. He asked the question. The Saroj is a KMP in X Limited and holds 20% share in Y Limited. Okay. Then related party exists or not? I'm coming to the answer here. Okay. Please look at this. It's a related party, a person, okay, is related to the reporting entity. Okay. If that person has control. Now, actually, the word control is defined in separate financial statements, Ind-AS 27, and consolidated financial statements, Ind-AS 110. Okay, 110. Okay, Ind-AS 110, they define control. Or simple words, I will say, but this is not the definition as per Ind-AS 110. Control, for example, I'm saying, okay, but don't presume that this is definition. You have a control of 51% equity. Okay, 51% equity, let's say 60% equity. So, majority, the word is called majority. The word majority is used in Ind-AS 110. If you have majority, and they use another word for control, it is called power. You exercise power on variable returns on related activities. You exercise a power to get variable returns on related activities. Then you have control. Sometimes even with 10% shareholding, you may have control also. So therefore, my dear friend Sahu, Saroj Kanta Sahu, Mr. Saroj is a KMP, key managerial personnel, and holds 20% share in the related party exists or not. So that is why percentage holding is only in Companies Act. You go to Companies Act. In Companies Act, in definition, subsidiary, company, holding company. There the word holding company is used, subsidiary company is used. But in India, the word holding company is not used. It is only called as parent. In India, they don't use a word called company. It is only called as subsidiary. And even a partnership firm can be a subsidiary to a company. A firm can have another firm as a subsidiary. Okay, so please understand this. So Ind-AS is quite big. You know, if at all you have been thinking, no, Ind-AS is only applicable for corporates, we are wrong. We are absolutely wrong. It is applicable for all. Okay, so a person or a close member is related to the reporting entity if the person has control or has significant influence. Actually, joint control means with one chavi he cannot open the locker. He needs another person to also put the key and then product. Then only the chabi will open. Okay, please understand. Then a significant influence, actually, maybe I can use a term called 20%, which is 20% and above, you can say significant influence. But again, this is not as per Ind-AS. So in Ind-AS, they have, with respect to control, they have not mentioned the percentage. But with respect to joint control, they have mentioned that together only the majority is possible. So even though you have a majority, for example, you have 60% stake, the other person is having 40. But for taking any decision, 75% is required. Neither A can decide nor B can decide. That is why it's called joint control. Please understand. No, I am having 60, so I am having control. No, you don't have control. 60 you have, 40 another person is having. No, 60 I am having control. No, you don't have control. This is called joint control. Because for any decision, 75 is required. So joint control means then it is a joint venture. So that is why look at this. That is why look at this, my dear friends. My dear friends, look at this. These are all joint venture, subsidiary. These are all subsidiary. Where is joint venture? Alok Industries, you have a joint control. Geo Payments Bank, joint control. Pipeline Management Service, joint control. India Gas Solution, joint control is there. Okay, but with respect to United Cable Network Digital Limited, you is a subsidiary because control is there. If control is there, it is subsidiary. If joint control is there, it is joint venture. If significant influence is there, it is called an associate. Okay, so that is why this standard is connected to so many standards. Okay, so many standards. So like for example, the significant influence word is used in 112. Okay, 112. Okay, and the word joint control is used in 111. Joint venture means joint arrangements. So India's 111 is with joint arrangements. These are all Panchapandava standard. 110, 111, 112, 27 and 28. These are all Panchapandava standard. Okay. So this standard 24 may look very small, but it has connect with so many places. Okay. He's a member of the KMP or the reporting entity. Matter over. Now, our Saroj question, sir, Mr. Saroj is a KMP in Excel Limited. Matter over. Matter over is a related party for Excel Limited and holds 20% share in Wine Limited. Then related party exists or not. Now his question is not clear. Mr. Saroj is a KMP in Excel Limited. So Mr. Saroj is a related party to X as per the definition. So you have to be very thorough in definition. Now please understand one more thing. I know what Mr. Saroj Kumar Mehta is going to ask. Saroj Kanta Sahu is asking a question. I'll bring Saroj Kanta Sahu's attention to para number 11. Para number 11 you have to come. Look at para number 11. In the context of this standard, the following are not related parties. Two entities are not related parties simply because they have a director or other member of KMP in common. X Limited, Y Limited has Mr. Saroj as a common director or a KMP. So, or because a member of the KMP of one entity has significant influence over the other. So, this is his Saroj Kumar Santa. Okay. Saroj Kanta Sahu. Okay. Saroj Kanta Sahu's exact question is 11A. So, he says, because a member of a KMP or one entity. In this question, where is the KMP of one entity? Okay. So, Mr. Saroj is KMP of one entity and holds 20% share in Y Limited. 20% share means what? The significant influence. So, because a member of a KMP of one entity has significant influence over the other entity, following are not related party. Matter over 11A. Very interesting. You have to read, I will say, read every para number. Read every para number. Every paragraph. You will enjoy. But only thing is you have to relate to practical examples. Okay, relate to practical examples. Now you have to ask me one question. Okay, I got it. I got what is called as a person. Now, who is this close member of that person's family? A person is related to the reporting entity like this. Now, a close member of the person's family is also related party. That is why please look at this. Some names are given. What are the names? Look at this. Relative of KMP. Nita Ambani. Actually, Nita Ambani is not a KMP, but relative of KMP. Look at this. Close member of that person. That person has control of the reporting entity. Who? Nita Ambani related to KMP. Who is a KMP? Mukesh Ambani. Mukesh Ambani's wife, Nita Ambani. So, Mukesh Ambani is a KMP and close member of that person's family. Now, who is a close member of the person's family? Close member of the person's family are those family members who may be expected to influence or be influenced in their dealings with the entity. That person's children, Mukesh Ambani's children, Mukesh Ambani's spouse, so Nita Ambani. And domestic partner, don't ask me domestic partner is not defined in Ind-AS 24. That is why I am taking domestic partner definition from other places. Okay, so these are all the domestic partner legally explained as part of various decisions in court. A person who is living with another in a close personal or sexual relationship. My God. So domestic partner. So Ind-AS is not a Desi standard. It is global. You say IFRS. So IFRS concepts are all broad. So that means those who are in live-in relationships, they are also a close member of the family of the person. Children of that person's spouse. Okay. Children of the person's spouse. Okay. And children of that person, domestic partner. Dependent of that person and the person's spouse are the dependent of the domestic partner. The domestic partner's father, mother, any other brother, sister, dependent. They are also related party. Look at that. You have to disclose it. So 376, 377. Okay. Very interesting. Okay. Very, very interesting. So this one annual report is sufficient for you to appreciate everything. Actually, I want you to take you to this 8 point. An entity is related to reporting. An entity means company. A corporate is related to the Reliance Industries. In any of the conditions, so 8 conditions are there. Entity and the reporting are a member of the same group. That means subsidiary. Okay. So that means each parent subsidiary fellows are related to each other. The fellow subsidiary. So I think a fellow subsidiary they have not given here. Company subsidiary. I will give you ONGC. In ONGC, fellow subsidiary will be there. Okay. Now, who's a fellow subsidiary means? You are a subsidiary to A. Okay. There is A, B, C. Okay. Or you will have a H, S1, S2. H is holding company. S1 is subsidiary 1. S2 is subsidiary 2. Now, S1 and S2 are brothers. Okay. They have the same parent. They are called brothers. Now, S1, how he will call S2? Fellow subsidiary. How S2 will call S1? Fellow subsidiary. It's called fellow subsidiary. So, you need to understand all this. So, please appreciate that. If at all you need to be thorough in Ind-AS 24, you need to understand these structures. Okay, you need to understand these structures. Guys, I must thank you for this particular standard. If you have any questions, I'll take it up. Else, I want to take you to Ind-AS 37. Okay. Now, anybody having any questions? We'll request anyone to unmute and share your thoughts. Anybody can unmute and share your thoughts. Or can I call by names? Can I call by name? How about we have Mr. Kedar Patra. How about Mr. Anand Kumar Narayan Swami? Can you unmute? We wish to hear you. Anybody? Nobody is there. I wish to know whether people are attentive. We have Anil Kumar's Galaxy. From Galaxy phone, he is connecting. Okay, we have Mr. We can have Mr. Gangadhar Madala.
No, sir, there is no question.
No question. Okay, thank you. We have Anand Kumar Narayan Swami. Very good evening, Mr. Anand.
Yes. Good evening, sir.
So you can give your reflections if questions are not there.
Okay.
Kindly introduce yourself. We wish to hear more about you. And Madala ji, Madala, can you introduce yourself from where you are speaking?
I'm speaking from Bangalore. Actually, I'm actually preparing for CA final exams. That's the reason why I'm attending.
Okay. So you are a CMA
No.
also?
Yes, sir, CMA. CA final exams I'm preparing. So that's the reason why I'm attending the Ind-AS classes
Very good. So
for the past 3 days.
what are your reflections about the past 2 days and today's session?
Today's session was good. So far the best, I think, because being from the south, maybe I have an inclination towards you, but yesterday and day before also were good actually.
Very good, Gangadhar. Our best wishes to you. Anything else you want to share?
Nothing else, sir.
Thank you.
All the best for you.
Our best wishes, best wishes. Anand Kumar Narayan Swami, we wish to hear from you.
I only was speaking right now.
Oh, you are Anand Kumar Narayan Swami, yeah?
Yeah.
Oh, Mr. Gangadhar Madala, we wish to hear from you. Kindly introduce yourself.
Yes, sir, I am Gangadhar from Bhubaneswar.
Boliye, sir.
I'm a post accountant since 1995 and teaching in the institute also, Bhubaneswar chapter.
Yeah.
Everything is fine.
Okay, good. Your reflections about today's session and yesterday's session.
So good, sir. No comment.
Thank you. Thank
Your
you.
presentation is too informative.
Good. Now let us go to the next one. Okay. Kalyani Sen is asking one question. I will request Kalyani Sen to unmute and speak. Her question is, if there is no transaction between, you can type no direct message. All messages you have to put straight away in the chat box where everybody can read. Okay.
Okay, sir. Sorry, sir.
You can read the question so that others also know. What is the question?
If there is no transaction between any related parties during the accounting period, it should not be disclosed and vice versa. Is it so?
You mean to say you want to go 0, 0, 0, 0? There is no transaction. Your question is, should I have to disclose 0? Is that your question?
No. Should
then
not.
What is your question?
Means only if there is closing balance in the transaction between the related parties, then only it would appear in the balance sheet.
No. Transaction, you have to give summary. Closing balance, if it is there, you have to give. If closing balance is not there, you need not give. Closing balance is different. Transaction is different. Commitment is different.
Okay, sir. Okay, sir.
Right? Transaction is different. Now, please look at this. That is why I used to show the live annual report. Please look at this. This is transaction. And I'll come to the what is called as the closing balances. So these are all disclosures in respect to related party during the year purchase. These are all purchases, and I will now take you to now balances. Please look at this balances. So transaction is also there, balance is also there.
Okay, sir. Okay,
So,
sir.
so sometimes the balance is not there. For example, so related parties, how many were there? 300 and some 61 or 91 were there. Now balances is only this much. Transactions only 20 items and only few they are giving. So that means another transaction is not there. But related parties, they are related parties. So who
Yes,
are
sir.
all the relatives printed? Now
Okay, sir.
you call for some function. You call for some function, you take a list of your relatives. You put all the relatives.
Okay,
And
sir.
you send email, SMS, and by post you send the invitation.
Okay, sir.
But actually, how many people attend? If you send 500 invitation, whether you have to cook for 500 people or how many you will cook for?
Those who are supposed to come, that I need to get it confirmed for any estimation or something like
Transactions.
that. Exactly.
So 500 is related party, 200 only transactions they have come and they have greeted.
Okay, sir.
That alone you ask them to stand and then you take a photograph. That means you are capturing, you are documenting their presence.
Okay, sir.
That is what it is. So everything that is happening in our day-to-day life only, it is there in Ind-AS. Okay.
Okay, sir.
Thank you. So now I am taking you to Ind-AS 37. This is another standard which I am really very fond of. Guys, I will only take another half an hour. Okay, so I will go only up to 8 o'clock. And after that, I leave the floor open for questions. So please ask questions. You interact a lot. Don't treat me as, you treat me as your co-professional. You treat me as your co-professional. You treat me as your friend. Okay, good. 37. This is a standard about provisions, contingent liabilities, and contingent assets. Now, I want to make one jatka point here. Okay, very important point. Okay, this standard is a big standard. Okay, almost you have 92 paras. How many paras? 92 paras are there. This is actually a liability standard. So 24 was a disclosure standard. It was not actually any accounting prescriptions they will give. They will not give how to present it, how to measure it, how to recognize it. No. So you are very happy. In Ind-AS 24, the most happiest standard. Why? Only thing, understand relationship. That is the most difficult thing to understand. Somebody asked me this question. Sir, is accounting standard is more about accounting? I said, accounting standard is about accounting, but to understand accounting, you need to understand business. Business first, accounting next, disclosure must. That is Ind-AS. That is Indian accounting standard. Now, 37, you need to understand one thing very important. Our normal body temperature. Okay, so our body temperature, when I'm tired, looking very tired, you can keep it here. Your temperature is running, you are not all right. That means you have crossed that number. What is that number? You have crossed 37. You have crossed Ind-AS 37. Below 37, you are normal. Above 37, Govinda. Okay, look at this. The normal human body temperature in Celsius, in degree Celsius, is 36.5 to 37.5. And in Fahrenheit, it is 97.7 to 99.5 Fahrenheit. This is the normal body temperature. And very interesting number is the reverse of 37 is 73. and the sum of 37 and 37 is 74. Both are adjacent. The reversal and addition of 237 is an adjacent number. So please understand that, guys, 37 is a border number. 37 is the end of accounting. And anything which happens beyond, sometimes you need to bring it inside the boundary. If it is outside the boundary, you say it is outside the boundary, then outside the books. That is why contingent. Remember, guys, contingent liabilities, contingent asset will not be recognized. Provisions will be measured and recognized in books because it is within the normal temperature. When you have gone beyond the normal temperature, abnormal, disclose. That is why 37. Very interesting number. Okay. Now, I want you to first understand. I'll come to this possible, probable, and definite. Very important words. Okay. So before that, I want you to read this para number 1. The objective of this standard. Okay. The objective of the standard is to ensure, why the standard? That appropriate recognition criteria and measurement base. I'll explain to you what is this called measurement base. I'll take to one interesting terminology. Okay. It is called warranty. Warranty. In warranty, you have sold products. And you are given warranty for the products. Now, how many months warranty you are given? 11 months warranty, 18 months warranty. Sales is done, profit is made. But remember, your profits will get eroded if your warranty claims are there. So, will the entire sale people will come back for warranty claim? No. But probable, that word probable, okay.
Probable.
Now, who is this? PK Maharana, who are you? Just introduce yourself. Yeah, I removed PK Maharana. Okay, good. The objective of this standard is to ensure that appropriate recognition criteria and measurement basis. Now, please understand that when I measure the warranty claim, you have given say 18 months warranty. Now, out of 18 months warranty, how many people may come back and claim their warranty? Something has gone wrong. You have to replace it. So if there are 100%, 100% may not come and claim. So there is a percentage. And that word is called as probable. I repeat the word probable. So this word probable is there in the provision, the word provision. So I will now introduce that word called provision. So provision is actually defined in 14. Please look at 14. I just want to give a lot of examples and case studies and all. I don't know how far my time will be sufficient. Okay. A provision shall be recognized when there is a present obligation and it is probable that an outflow of resources embodying, what is probable? So will you say probability means it is between 0 and 100, from 1 to 99? No. That is where you need to understand the difference between the term called probable and possible. Possible, it can happen. Probable, likely to happen. Is there a difference between this? Yes. You are close to 100% probable. Possible, it can happen. It cannot happen also. So that means you are close to 0%. It is not 0. 0 means impossible. Very good. 100% means very good. It is not yes or no. It is between yes or no. If you are close to no, possible. Close to yes, that means close to 100% probable. So the word possible is not used. The word probable is used. So that means you need to have evidences that it will happen. Okay, I mean, it's likely to happen. I will not use the word will. It is likely to happen. So that is why we will take the past experiences of the warranty. Okay, when you have made a sale, what is the past experience? In first month, how many people will come back? In second month, maybe as a month is grow, third month, fourth month is actually close to 18. Maybe more claim can come because last month for claim, people make a more claim. So this you go by your past trend. Maybe you can add a pinch of percentage up or down. That is called tweaking. That is called estimation. Okay, so warranty provision is an estimate. That is why, my dear friends, our audit report, look at the KMP, look at this. I'll go to warranty obligation. I'll look at key audit matter. Look at key audit matters. Look at key audit matters. In key audit matters, fair value estimation of oil reserves, litigation matters, impairment, fair value measurement. So these are all, look at this. Estimation of oil reserve, decommissioning, depletion charges, impairment. Maybe I have to take you to Ashok Leyland's balance sheet. Then there the warranty obligation. Ashok Leyland, look at this. In Ashok Leyland's annual report, I'll take you to key audit matters. Look at key audit matters. Here, warranty obligation. Look at this. So warranty calculation, it is actually, look at they are mentioning about provisions. Provision for warranties. Okay. So this provision is not, it is a journal entry. This is only journal entry. JV, the journal voucher. So you will not have a payment entry or your receipt entry. It is a journal voucher. So you are recognizing in your books of accounts because you are probable that there will be an outflow of resources based on your past experience. That will be required to settle the obligations. You very well know in the past people will come back. So therefore, today also, why you have not provided in books of accounts? So that is an expenditure that will happen next month, next year it will happen. So that is, and that can you audit? Can you, any auditor can say the provision is a right number? There is no word called right, there is no word called wrong as far as estimation is concerned. That is why this particular standard is very interesting. You need to be very practical in understanding business and how it is actually converted to the language of financial reporting. Okay. So guys, I am now taking you to the most interesting paragraphs. Okay. So recognition criteria, measurement basis are applied to provisions, contingent liability, contingent asset. Now I have to make one, I'll come to provisions because definitely we need to know what the definitions are. Okay. So, you know, this particular standard has 9 definitions in para number 10. In para number 10, there are 9 definitions. I'll take you to it. And what is a contingent asset? What is a contingent liability? What is a provision? It all have been defined. Okay. And that sufficient information is disclosed to enable the users to understand nature, timing, and all. Because it is a journal voucher. JV, it is not a receipt. If it is a receipt, you will have some bank statement, money would have come. You would have some document, you would have agreement, something will be there. But for provisions, where is the document? There is no document. You only go by probable. The word is only probable. Okay. But there is one more word where the word possible is also used. The standard is using the word both possible as well as probable. Okay. I'll come to that. So now I want everybody's attention to this. This standard shall be applied to all entities in accounting for PCLCA, provisions, contingent liabilities, and contingent assets, except those results in executory contract, except when the contract is onerous. So there is an exception to exception, which is applicable. That means for onerous contract, the standard is applicable. Now, what is a onerous property? What is a onerous contract? Okay, onerous contract. Now, I think somewhere I have given the definition for onerous. I think this is what it is. Okay. Now I want to make one observation here that the similar standard in accounting standard is 29, but there is no prescription about onerous standard, onerous contract. Now what is this, sir? What is onerous? You have not explained. You are only speaking about onerous. I only know owner means O-W-N-E-R, but here owner means O-N-E-R, onerous. What is onerous? It seems both are very close. O-W-N-E-R, owner, O-N-E-R, owner. There is a lot of difference. There are two friends who are having they met for one friend came to his home to meet after a long time. So they were having a cup of coffee. The coffee is served by the other person, friend's wife. So he was introducing. My good friend, she is my wife. So and so is her name. And she is the owner of this property. His entire bungalow belongs to her, owner of this property. And she is my owner's property. And wife was very happy. Oh, owner of the property. She is my owner's property. I think she doesn't understand what is the owner's property means, but she understands that something has been praised by her husband. Okay. So after that she leaves. This friend is also confused. She is owner of this property. Okay, I understand. But you said she is your owner's property. I don't understand what is this. Then he clarified. Very simple. When you are that term owner's property has been defined. Actually, it's been defined in the para number 10. Para number 10, 8th definition. Owner's contract. Okay. When on a property, the consideration what you get from sale of a property is 40 lakhs. But for maintenance of the property, you have to pay 50 lakhs. That is called onerous property. So that means the wife is more an asset, less an asset, more a liability. That is what he means. Okay. Liability is more, an asset is less. Similarly, onerous contract means the revenues are less, but the cost is more. So you have to spend 90 lakhs, but the revenue will be 75 lakhs. So you very well know there is a loss of 15 lakhs. Provide. That is what it says. So what it says? Look at para 2. This standard shall be applied by all entities in accounting for provisions, contingent liability, and contingent asset, except those resulting from executory contract. The executory contract means the cost is 75, revenue is 90. That is called executory contract. Except where the contract is onerous, where the revenue is 75, cost is 90. Govinda. That's 50 you have to provide in books of account. That is what. Now, for your kind information, I want you to take you to para 7. In that standard, provisions have been prescribed in that standard already. For example, Ind-AS 16. In Ind-AS 16, what is 1/6? Property, plant and equipment. So you buy a machinery for 4 crores, you have to provide for depreciation for that machinery every year. So provision. prescribed in Ind-AS 16. Impairment of assets prescribed in Ind-AS 36. Wow. So, then why this particular standard? This standard defines provisions is also used in this context such that these are adjustments to the carrying amount of assets and are not addressed in these standards. So please understand that you are already being given a prescription in the respective standard with respect to provision, with respect to creating provisions like impairment and depreciation. But if such prescriptions are not there, then for other assets, okay, other assets are maybe for expected expenditures, okay, so it is a liability, okay, so technically you have to provide for liability, so this is a liability standard, okay, good. So now 2 is over, those resulting executive contract and those covered by another standard, that is what I mentioned here. Well, that is already mentioned, so that will not come under 37. You will search for, sir, provision is there, but where is provision? They are referring to 16, but you only thought that provision means it will come in 37. But provision for depreciation, it is there in 16. So that is why those covered in another standard, that is not applicable. Executory contract, that is not applicable. Onerous contract, that is not applicable. Okay, good. So now I am now taking you to the 9th paragraph. Wow. This standard applies to provisions for restructuring. Now, restructure, when you do, you have to provide. No, you should understand what is meant by restructure. Look at the 9th definition in 10th paragraph. Restructuring is a program. Next year, I am going to restructure my business. That is planned. Next year, I am going to do. And controlled by management, top management. And materially changes. Any one of that. The scope of the business undertaken. That means I am either expanding my scope or I am reducing my scope. Okay. Or the manner in which that business is conducted. Manner in which that business is conducted. The restructuring is a program that is planned and controlled by management and materially changes either scope or manner in which the business is conducted. Now, I'll give you a lot of examples. Because of that, there is an expected expenditure, and that expected expenditure you have to honor. So, therefore, you provide for that in your books. So because you have, that is being, please understand, restructuring has to be committed by the top management. It's a program that is planned and controlled by management. So, unless and otherwise there is, for example, there is an agenda where board has discussed about restructuring. Okay, discussed. So that means planning, only planning only. Planning is different from planned. Nind means resolution over. We are going to do. Planning is different, planned is different. Okay. Planned and controlled by management. Controlled. Planning, controlling is different from planned and controlled. Please appreciate the way the English has been used. I just want to share with you a lot of stuff. Especially I want to share with you, this is onerous contract. Okay. And maybe I want to share with you the actual definition of the provision. Okay. Now, guys, thank you very much. I'll be open for any questions. Okay. Any questions are there?
Actually, due to some technical issue, we have muted all the participants.
No, you can unmute, Ji.
Yes.
We have Shakti, though. Shakti, there is yours.
Now it is muted, sir.
Everyone can speak.
Okay, okay. We have Ram Shankar Mishra ji. We will request Ram Shankar Mishra ji to kindly unmute and share his reflections. We have Mr. Dr. Nabagan Malik.
Sir, good evening, sir. Ram Shankar here, sir.
Oh, Mr. Ram Shankar, how are you?
Yes, sir. I'm fine, sir. I'm doing well, sir.
So it's a pleasure to hear your voice.
Same here, sir. I have been hearing your voice since a long time, sir. From the Institute's Ind-AS program, I have been learning and I have been attending all your classes, sir. And it's my pleasure that I have learned a lot of things from your classes, sir.
I'm actually learning a lot from your questions. So please don't stop asking questions.
Actually, sir, I have a lot of peculiar questions because I have been working in this area. So we have been interacting with auditors and we are working with Big Fours. So actually, we are a lot of thoughts are there. New guys are there. So every time new questions, new thoughts, new angle of understanding of Ind-AS is always there. That's why that whatever is there, just like, sir, I just would like to ask one question here because you are just interacting. Sir, actually, we have a turnkey project with EIL, sir. And in that turnkey project, it is back to back. Whatever they will incur, we have to reimburse. MRPL has to reimburse EIL. And some procurement has been done by EIL. And on that, some litigation is that on account of VAT. Because they are supposed to pay.
On account of VAT. VAT.
Yes, VAT, okay. Value added tax, sir. So thing is that in their book, actually, what is that? They are fighting that case as EIL point of view. So that is now litigation, so that certainty is there. So that's why they have provided the contingent liability in their book. So whether MRPL is also required to book that contingent liability in our, because ultimately if they will lose that case, then that amount will be required to be paid by MRPL to EIL because that agreement is back-to-back basis. So my question is that in their book, if contingent liability will be there, in my book also it will reflect or it will not reflect?
That is, you can take a stand that, see, in his books of accounts, see the contingent liability, you have made it as you have created a provision. Am I right? EIL has created a provision.
EIL has showing it as a contingent liability. No provision.
So that means they have not created a provision.
Yes, sir. Yes, sir. They are showing as a liability, contingent liability.
Contingent. That means there is only disclosure.
Yes, sir.
So in your books of accounts also, you only show it as a contingent liability. In the list, say there is a probable impact is possible because of the back-to-back contract with Engineers India Limited. So that you can have it as a separate sub items in contingent liability. So contingent liability direct, contingent liability indirect. You can classify into two.
So you mean to say that it will be there in both the books of EIL and in our book? In
Absolutely.
both,
you are also committed. You are indirectly. You are in live-in relationship with Engineers India Limited, no?
Okay. Fine, sir.
Thank you.
Thank you, sir. Thank you very much.
Mr. Surya Narayanan, you have some question? Mr. Surya Narayana? Okay, then we'll request chairman and chairman of PD committee and to close the session. Saktidhar Singh ji.
One minute, sir. Actually, sir, there is no question in the chat box also.
Oh, we have a question in chat box.
No question, sir. Okay, then we will close the session.
Yeah.
Yes. once again, very good evening to all. My hearty thanks and deep gratitude to our today's resource person, CMA, CACS, Dr. Gopal Krishna Raju sir, for delivering on these two Ind-AS in detail, which is very much insightful, and hope all the participants should understand clearly and take away something and apply in their practical life. Thank you, sir, for joining us. My sincere thanks to all the participants for their continued support and cooperation extended to us in the 3 days of the series of WEBINT. I, on behalf of the managing committee and CMA family members of ICI Bhubaneswar chapter, extending heartfelt thanks to all the participants, stakeholders, and to our resource person also. I convey my pleasant thanks to all participants from Pan India who have participated our assembly's last 3 days in virtual platform. Also, they from support. My special thanks to man behind 3 days series of WEBINT on Ind-AS, who is none other than CMA Niranjan Mishra sir, Central Council member, who always supported us to conduct more and more activities. Thanks to Chairman CMA Himoj Mishra and the entire members of the managing committee. I am happy to express vote of thanks to staffs of Bhubaneswar chapter for their effort and support. With this, I hereby announce the closure of 3 days WEBINT series on Ind-AS. Thank you all. Jai Jagannath. Sir, namaskar.
Thanks.
Sir, namaskar.